Hi everyone, I'm Marcel Weiss, Zurich's Global Head of International Programs, and I'm delighted to welcome you to the European Risk Management Award Weeks 2020, where Zurich is sponsoring the category Innovative Insurance Program of the Year. As you can see, unfortunately, we are only virtual this year because of the pandemic. But as the saying goes, necessity is the mother of invention. And never is innovative thinking more important than in difficult times. So it fits that this category recognizes creativity displayed by risk managers in tackling complex industry challenges. I want to congratulate our finalists and wish them good luck. And I hope you enjoy the discussions. Don't forget to access the award ceremony this Friday, 11th of December at 4:30. Stay safe, good luck, and all the best.
So the key element of my project was to combine an aviation liability insurance policy together with a general non-aviation liability insurance policy, and to have one unique umbrella policy wording, including more than 60 countries. The main challenges is that if you are convinced that your idea will have many benefits in the future in terms of cost, time, and efficiency, you should not hesitate to invest time today. In order to change an existing and traditional market, everybody needs to be convinced internally and externally that the new structure is better, and to accept that the old structure could have issues and be improved. The solution I put to implement my project was to, first of all, reduce any coverage gaps and duplication in the policy that I am managing, have a clear risk delimitation and mutual understanding with the insurers as to where specific risks are covered, such as, for my business, food contamination versus aircraft hit. That would also include simplify the process and administration, and last but not least, to produce a policy wording which is more relevant and responsive to the specific business profile of my company.
So our project was really looking at operational risk, particularly cyber exposures, and we were concerned about an increase in cyber attacks, which I'm sure we're not alone on. But how would this play out in our insurance coverage? And we'd actually had some close calls in terms of some small losses. And we had two, and neither of them landed on the cyber program. One's landed on the crime program, and the other on the kidnap and ransom program. So I think what we were really interested in doing is understanding the risk better, and then making sure that we avoided coverage gaps. So that was really our project. Real solutions we brought to this was to work collaboratively, both internally between the risk management team and the capital modeling team, but also externally with our insurance broker, Willis Towers Watson. So the challenge was to use the information we had. We had operational risk scenarios. We had a capital model that brought all our risks together and allowed us to create a stochastic model. And we also had the input from our chief information security officer to the trends and the frequency of events. So what we're trying to do is build a model that we could then use to test different risk financing solutions and come up with the optimum one. And what we did is we actually looked at the 1 in 100-year event, which was our risk appetite, and we compared the volatility around our losses to the premiums, and we looked for the optimum solution. Yes, so one of the challenges was as I suggested before, we had 3 different insurance policies that had an element of cyber insurance, and we were concerned that we couldn't guarantee there wouldn't be gaps in cover. And so what we designed was a excess of loss cross-class cover that sat above all 3, provided a single limit of $10 million for regardless of the underlying policy that was impacted, and it was most importantly placed with a single carrier, so that if there was a coverage dispute, they would be having it with themselves, which gave us more confidence that we would get a recovery. And the aim really was to have a catastrophe insurance for these operational risks, and that's what we achieved.
The key elements of our project were that as a multi-utility, having taken on a new venture with the establishment of the water business in Ireland, we were finding that there was large numbers of construction projects ongoing throughout the country, whereby the historical method of insuring those projects had been to allow the contractors lead the insurance program, with the employer paying for the insurance without having any real insight into the cover that those projects were carrying with respect to insurance. So to get some clarity on cover and cost and certainty around budgeting of cost, we decided to implement an owner-controlled insurance placement, which in itself is not necessarily innovative, but the innovative part, I suppose, that applied to our business was that we had a huge number, probably in excess of 150 to 200 projects ongoing, which would be under 20 million euros in value, and potentially a large portion of that under 10 million. So what we decided to do was we put an owner-controlled program in place for projects above 20 million, and we had a declaration policy in place for projects under 20 million, whereby it gave us certainty that the projects were covered, and it also gave us clarity on the cover that was in place and the cost of that cover. The challenges that we met were a misunderstanding, I suppose, internally, that that the insurance was being paid for by the contractor. Therefore, why should we pay for the insurance when the contractor was paying for it? But of course, the contractor was paying for it and inserting the cost in their own fees. So in a roundabout way, we were paying for cover that we had no real control over or insight into, and also we didn't have any relationship with the insurer. So to overcome that, there was a bit of an education program had to be undertaken with our executive and our board,